City analysts have penciled in their predictions for the Bank of England's next big interest rate decision on Thursday. Here's what the bank's policymakers will say. Interest rates are likely to be cut to 4.25%. Bank of England's inflation forecast for this year will go over its 2% target, and President Trump's tariffs will be highlighted as a detriment to UK growth. Rachel Reeves will celebrate the cut and list off its plans to drive higher growth. In a world of flimsy policymaking and flaky objectives, the predictability of what the bank's Monetary Policy Committee will conclude at its next interest rate decision on Thursday may be refreshing, but it's certainly not reassuring. Amid the patchy data points and vague comments, forecasters will be trying to figure out whether the bank will speed up its rate cutting cycle or continue on its more cautious approach. So, what will they be looking out for? Changes to the Bank of England's rate cutting slogan, to be careful and gradual. The consultancy Oxford Economics and Deutsche Bank both believe the bank may decide to drop the word gradual from its policy approach. This would signal that the bank could accelerate interest rate cuts. Whereas the Bank of England has cut interest rates to 4.5% from a high of 5.25% last July, the European Central Bank, or ECB, has moved at a faster pace, making 7 cuts in just over 18 months. But the Bank of England's recent difficulties in controlling inflation, which surged to as high as 11% in October 2022 in the wake of Russia's full-scale invasion of Ukraine, and Liz Truss's short stay in Downing Street, have made rate setters more reluctant to do anything that exacerbates inflation. If surging energy prices and a deterioration in the pound led to some headaches at the bank nearly 3 years ago, President Trump's tariffs may leave rate setters with migraines. Economists will be extremely sensitive about what a breakdown in global trade could do to prices, having seen the inflationary effects on price growth during the pandemic. The Bank of England's decision in March said inflation would peak at around 3.75% this year, far higher than that penciled in by leading city forecasters. Economists at the bank who decide whether interest rates are cut have generally suggested that Trump's tariffs will weigh down on price growth in the UK, as waves of Chinese goods flood into Britain and increase supply. And if inflation is set to come down to the bank's target of 2% at a faster pace due to the ongoing trade war, then policymakers may choose to accelerate interest rate cuts further along this year. The hit to UK GDP growth from tariffs would also encourage policymakers to vote for an interest rate cut, as lower borrowing costs can help boost the economy. But many will still be very cautious about following market predictions of a total of 4 interest rate cuts this year, as tax rises have pushed up inflation. Former rate setter Jonathan Haskell told City AM last month he would vote to hold interest rates due to high price growth in services. And trends can also turn on their heads. Retaliatory tariffs or higher trade barriers set by the UK government could thwart the bank's plans to hit its inflation target by the end of next year. So far, the Treasury looks reluctant to do anything that stokes trade tensions further. Reliable trade data is also not at the disposal of banks' policymakers, while energy prices, though they have come down significantly in the last few days, are quite volatile. For the most part, Monetary Policy Committee members are working in the dark. All they can do now is try to provide some clarity. Read more on the Bank of England's interest rates decision at cityam.com.